All right. Good afternoon, everyone. So those of you who have joined us a little bit early or joining us early right now. So thank you all for turning up early. We'll wait a couple of minutes before we'll get started. Today is the strategy clinic through the Vantage Brokerage Strategy Clinic. So hi, Deborah. Hi, Jethro, Philip, and Zoran. How are you guys doing? Thanks for joining us a bit early. As we get started in a couple of minutes. Good stuff. How are you doing? How are you doing? Hope you're trading well. Markets have been quite active today. Well, yesterday, last night, and also today. So do make sure that you're trading well, trading safe. Big thumbs up if you've been trading well. If the trades have been working out for you. Not too bad. Fantastic. I hope you have questions ready to go, because what I'll be doing is I'll be hoping to help you with your trading strategies. If you have any questions over that, helping you with any questions you have, and then also sharing some of my trade ideas, possible trade ideas, some setups, the way I trade, how I look at things as well. So if you have any questions, please feel free, put it into the chat. I'll be happy to help you with your questions or any setups that you have, any questions you have. All right, so I think for those of you who have joined us early, let's get started. Less waiting around, and if anyone else joins us from here on, then all good. Bitcoin long at 21,800 is what I'm looking at the moment. What do I think? I'll get to that, Deborah. So I'll get to that shortly. So we're looking at some cryptocurrencies as well. That's fantastic. All right, let's get started here now. So as usual, before I get started, before we do anything, as with all webinars, I'm sure you're familiar with, a quick introduction, a quick view of what we're doing today. So I hope you see the screen all right. This is the Strategy Clinic. My name is Jin Dao. Today is the 14th of July. We're going to be going through the Strategy Clinic, hoping to help you with developing your strategy, your trading strategy, answering any questions that you might have. And then also, if you get the time and get a chance, I'll share with you the way I look at the markets, the way I plan my trades, and we'll go through some trade ideas, some trade analysis, and possibly look for some potential setups that we might come across. With that, as usual, a quick disclaimer here. Any information shared or any information, contacts, opinions which are expressed in this presentation and the following slides are solely those of the presenter, not necessarily those of Vantage, and are solely used for educational purposes only, as they do not constitute investment advice and or consultation on how a client should trade. Vantage does not guarantee the accuracy or reliability of the information provided herein. What we mean in short is that I will be looking at sharing my trade ideas, my thoughts, my processes, and if I look at any trades, if you're looking to jump into any similar trades, this webinar is purely educational. Nothing in this webinar should be construed as investment or trading advice. Make sure you do your own due diligence, like risk management, like trade sizing, like whether you're going to be you're comfortable entering that trade or not. Do your own due diligence before trading. All right. So just a quick introduction of the team here. We usually have Desmond or Cassandra doing the session, but Desmond is down, he's sick. So I'm here, I'm Jin, jumping in, one of the prop traders here, with helping you with your trades and your possible, looking at some possible trade ideas as well. So again, quick introduction done. If you have any questions, please feel free to put it into the chat there. I have some questions already, but if any other questions, please feel free to put it into the chat. I'll be happy to guide you through that process. Right, so pardon my coughing. I do have a bit of a cough going on right now, so I'll be off and on. I'll be coughing a little bit. Jumping straight into it. Looking, the way I trade, I look at the news first. So my trading method, I do first the news analysis. I look at the news before I decide, whether the markets are likely to go towards the upside or to go towards the downside. Then after that, I look into the technicals, deciding whether it's going to be, good time to follow that trade analysis, to buy or to stay out of it at that point. So what we've had today, just to do a quick recap of what we had today, as I wait for some of you to put in your questions there. Early this morning here, GMT +8, 9:30 a.m., we did have the Aussie employment number being released. Aussie unemployment rate dropping from 3.9%. It was expected to be at 3.8%. It got released at a 3.5. So a strong number there for the Aussie. And employment change going from a 60.6, only expected a small change at 30K, but actually came out at 88.4. So strong employment numbers there for the Aussie dollar. What we actually saw, and I'll show you this on the charts, is some strength towards the Aussie dollar, but that has quickly reversed through the trading session today. With that, not much else today, apart from the US PPI number, producer price index number, to be released, looking like it's not going to change too much. What you would have noticed is that although there's not much news today, we are seeing quite a lot of volatility in the markets because of what happened, not today, but last night. So if I did go back into yesterday, last night we had the US CPI number month on month being released. Inflationary data there was a 1%, expected to only grow at 1.1%, but it grew by 1.3%. That's a month on month data. The year on year for the US inflation actually reached a 40-year high towards a 9.1%. So inflation in the US now year on year is at a 9.1%, which is a 40-year high. And that means that the likelihood, or it's almost certain, that the Federal Reserve is going to increase, the US Federal Reserve is going to increase rates at its next meeting on the 28th, if I'm not wrong, of July, by 75 basis points. But because inflation is so high right now in the US and actually across the globe, the markets are speculating whether the Federal Reserve is potentially going to increase rates by 100 basis points, similar to what the Bank of Canada did last night, where they increased rates by 100 basis points. They were expected to only do 75, and they increased rates by 100 basis points, taking rates for the Canadians from 1.5% to a 2.5%. So we saw a lot of news, big impact news last night, with the US inflation data being released, with US inflation being very high, 40-year high, and we saw the Canadians interest rates at 2.5%. And also the key focus nowadays is, when I look into the charts here, the euro dollar last night actually broke below that 1.00 level, right? It broke below that 1.00 level, reached at that 0.9998 before we saw that big spike up. So euro dollar broke below parity, had a big spike up all the way towards that 1.012 level before tracking back down, now sitting at 1.0020 again. So we expected that. We saw that line at 1.00. Once it broke below, there were a lot of buyers at that point, traders looking to buy at that point, and that's what led to that big shoot up towards that 1.012 level. So this is how I look at the markets, or how I always approach the session. My trading sessions is always check out the news. Again, check out the news, what could happen, where should prices be going. Now we're looking at dollar strength being applied because of that strong inflation number. And then what else could be expected? Then I look into the charts. I prioritize trend following trades over the trend reversal trades or counter trend trades. Then after that, I will start looking into which ones will be trend following, which ones will be reversal trades that I could look into. So the first question we had here was, as much as we were talking about currencies, let's look at the cryptocurrencies first. Bitcoin long to 21,800 is what I'm looking at the moment. What do you think? So Bitcoin at this point, okay, I wouldn't look at Bitcoin on the hourly time frame. A little bit too volatile at that point. I look at it on H4. And I actually like what I see. I don't think it's ready for a buy right now, right? So if I zoomed out a little bit, squeeze it out so it's a little bit easier to see, I find a support level, a support area at this 19,000 level. At this 19,000 level, and you can see that over the last couple of candles, this was on H4 time frame, which you saw Bitcoin track up towards 20,000 or just slightly above 20,000 before tracking back down again. So is it a good time to buy right now? I don't think right now, but I think a short-term buying opportunity could be setting up soon, could be setting up shortly as we go into the trading sessions. Maybe not today, maybe tomorrow or into next week, where we could be looking at price. I'm looking for price to track down towards that 19,000 level. Oops, you don't see the graphics. Hang on, let me just check again. I'll just share screen again. How's that? Are you seeing the chart right now? Give me a thumbs up if you see the charts. Good. Okay, great. Sorry about that. All right. So let's start again. No worries. Okay. So for Bitcoin here, what I'm looking at is as it trades at currently 19,750. I think that we might actually be seeing this track lower. Momentum seems to be pushing it down. That short-term push to 20,000 or slightly above 20,000 was a push towards the upside, but you can see that it's quickly reversed back down. So in this case, what I'm actually looking for will be for this move to continue, possibly down towards that 19,000 level, or if not, towards that 19,300 level, the most recent low point, before I would look to buy it up. Before I look to buy it up towards the upside. But what you want to see at this point or this level will be, you want to see a rejection or a bounce off from this support level. In terms of how it looked like a candle, I would say I want to see that. I'm terrible with drawing on a mouse, but I want to see that come down, hit that support level, bounce back up towards the upside before I would be looking to buy up towards that first target, 20,500. 20,500 because of because of this level here, and then possibly towards the next target of 22,000 because of that recent point there. So a long answer, but to cut it short, it would be to not ready to buy right now. I think I'll look for it to drop a little bit more, let it come down to test lower, rebound up before I look to buy back up towards that 20,500, and like one of your targets, the 21,800 or the 22,000 level. All right, so I hope I answer your question there, Deborah. With that, jumping back into the dollar index. So before I get into any trades, like you can see that, you know, I look at the news first, right? I look at the news, I decide what should be happening, whether price should be going up or whether the dollar should be getting stronger or weaker. Then I check into the dollar index, looking into, is that following with my initial analysis, looking at, hey, if I anticipate that dollar should be getting stronger, if I anticipate that dollar should be getting stronger because of a strong CPI data, because of the anticipation that the Fed Reserve should be increasing rates more aggressively, possibly 100 basis points in the next upcoming meeting, then we're looking for the dollar index to climb. We're looking for the dollar strength to come in and looking for the dollar index to climb. So that results in the expectation for a push towards the upside. At this point right now, with dollar index sitting at 108.56, I'm looking for this candle to close positive, to close green. Then my next target will be that 109 resistance level. So looking for that dollar strength to come back in, and looking for that to push towards the upside. All right, take that away. I've got too many drawings there. All right, so I'm looking for that to push towards the upside on the dollar index to hit that 109 level. But bear in mind that as much as we expect the dollar index or the dollar strength to come back into play or to be there, a lot of the dollar strength is driven by recently, especially the dollar strength is driven by the way the euro dollar is performing. Why is that? It's because the dollar index is made up of a basket of currencies, and the euro is actually the major proportion of that dollar index. Usually about 40 to 60% of that basket. So any move we see in the euro dollar, you usually see a inverse move on the dollar index. So because of that, if we look at the euro dollar here, you can see that it's been sitting right across, sitting just above that parity level. And that's why when we look at the euro dollar, it hasn't had much direction. It's been sitting right across as well. And if I looked at it on the H1 time frame, just to show you an example there, last night with the news, strong CPI data came out. We saw that dollar index shoot towards the upside from 107.87 towards 108.56, right? But that big retrace back down is primarily because, as we saw the dollar index shooting towards the upside, the euro dollar shot down. And as the euro dollar shot down and broke below parity, all the buyers came into the trades. We saw the euro dollar push up above parity very strongly towards that 1.012 level. And that's why we saw that relationship or that big spike towards the upside and then back down again, and then continuing back up again on the dollar index. It's all driven because of how the euro dollar was moving last night, right? As it broke parity and bounced off from that point. So just be a bit careful You don't want to base all your trades just on the dollar index, because it's going to be influenced quite significantly by the euro dollar, unless you see the pound dollar, you see something else moving a lot and euro dollar not moving, then we could see it as the dollar index leading the charge rather than the euro dollar. So that's how I get my view. I look at this now and I'm still anticipating dollar index to try to break above. It can break above 108.60, then we could see 109 on that dollar strength. So now the way I'll look at it is, okay, I'm anticipating dollar strength. Not much news to come up tonight. Looking for opportunities on dollar strength, right? So I'll go through the charts one by one and we'll start looking at possible trade setups. If you have any questions, again, please feel free to put them into the chat. These are all trades on, I'll look at it on the H4 and on the H1 time frame, so that we cover all the different aspects. The Aussie dollar on the H4 time frame here, I'll show you that this morning, as the news was released on the good employment data I was sharing with you just then, we saw the Aussie dollar push up, but then that was quickly reversed back down again. Right now, with the Aussie dollar sitting at this 6743 or 44 level, 45 level. At this point, I think that the Aussie dollar is likely to be trading within this range, right? It's likely to stay within this range of 0.6717 or 0.6718, and then upside range of about 0.68. I'll move this a little bit higher, just show that number there of 0.68. So likely to stay within this range. But if we do see that dollar strength come into play, hitting that 109 level, we could see the Aussie dollar come down and break below this 6717 level, right? I wouldn't do anything at this point. I personally don't like trading in a range. I think it's just too much hard work trading in that range. I'll be looking for the Aussie dollar to break towards the downside, following that trend, to break towards the downside. And only if it breaks towards the downside and price closes below 0.67, I would say about there, then I'll be looking at getting into a selling opportunity. My stop loss will be above that recent resistance level there, and then my take profit will be towards the next support, and this will be a round number support at 0.66 there. So a very good risk to reward trade there, but you will need to wait, need a lot of patience there to wait for price to actually move down, break below the 0.6715 level, close below 0.67 before looking to sell down with your stop loss above resistance and your take profit at that 0.66 level towards the downside. Bear in mind, we are in a very, very low point here on the Aussie dollar, so you anticipate quite a bit of volatility if it does break below this point. So always wait for the candle to close before you get into the trades, right? So I got a request for Aussie CAD, Kiwi Yen, and Kiwi CAD. I'll get into that. So since we're looking at the Aussie dollar, I'll look into the Aussie CAD right now. So the Aussie CAD, right? So CAD actually has been quite interesting. As I was just sharing with you, we are anticipating to see further strength in the Canadian dollar. Why further strength in the Canadian dollar? We've seen the Bank of Canada increase rates by 100 basis points, taking Canadian overnight rates to 2.5%. That's one reason why we should see some Canadian strength. And also, we've seen that the statement from the Bank of Canada indicating further rate hikes are likely, right? They're not ruling out further rate hikes. So if they do continue with more rate hikes. I don't think they do 100 basis point again, but if they do continue with further rate hikes, we're anticipating the markets are going to be pricing in some likelihood of further CAD strength. So looking at the CAD, the Aussie CAD here, we've seen this push up because of that retracement. So I'll show you CAD before we get into it. So the CAD has been pushing towards the upside because of that dollar strength at this point. Some weakness, I think some short-term weakness, we've seen this as a resistance level there. So when we look into the Aussie CAD again, what I'll be looking for here is I would have my first resistance level at about that 0.89 level. I'll definitely have a support at about this point here of 0.8755, about that point there. So if I do see, looking at the Aussie CAD, looking at the way the CAD is pushing towards the upside, some weakness because of that dollar strength pulling it up, I would be looking for this to happen, right? I'll be looking for if price can break above this point, right? Our first part is I'll be looking for price to break above this 0.8826 level, but I'll be anticipating for it to come towards 0.89. I want to see price hit and reject this 0.89 level. Right, that's terrible. Let me do that again. Right, so I anticipate to look for price to either first part hit this point and turn back down. That'll be a very short-term trade. It could be an H1 trade, but if it's into the longer term, I'll be looking for this to track higher, hit that 0.89 level. Then I'll be looking for a rejection towards the downside to look for that counter trend trade or that wide range to trade it back down again. In this case, what you would be looking at is about a selling opportunity at about 8880, stop loss at about 8915, 8920, and then your take profit just above that recent support level at about 8770. So about there. Fantastic risk to reward towards the downside. Needs price to climb from 8816 to 89 and then reject that level. Alternatively, if it does hit this point and turn back down, although a little bit unlikely, you could be looking for reversal towards the downside here. But in this case, a lot less weighting, but I think that the risk to reward is still reasonable. Right, risk to reward will still be reasonable as we look at 0.8815 as a possible sell opportunity with stop loss at 8840 and take profit at 8870. Still looks reasonable, but I think that, you know, if it does push towards that 89 level, it'll form a nicer trade on the Aussie CAD. Right, so before I jump into some questions here, before I jump into the Kiwi Yen and the Kiwi CAD, let's look at the Kiwi dollar first. All right, so Kiwi dollar, look at it. I had that blue line from way back then. That level of 0.61 is holding the downside on the Kiwi dollar. That 0.61 is holding downside on the Kiwi dollar. We've seen that it struggled to break lower 11th of July, 12th of July, again on the 13th last night. And right now tried to break, but it seems like it's bouncing back up again. It's struggling to break below that 6.1 level. Why so? It's because if I did it onto the weekly time frame, you can see that the last time it broke below 0.61 was back in 2020. So 2 years ago, March 2020, we saw it break down. That was because of the pandemic. We saw it break very strongly down, but it didn't last very long. It broke lower before it retraced all the way back up and has stayed above 0.61 since then. So what you could be looking for here is that the Kiwi dollar is going to struggle at this level towards the downside. It's going to struggle there. Can it break? Most likely it will break, but it could be a very brief move towards the downside before tracking back up again. So just be very careful if you're looking to sell the Kiwi dollar towards the downside. I think we're going to see a lot of volatility at this point because it's at the 2-year low right now. So with that, as we get an idea of what we expect here on the Kiwi dollar, possibly for me, I would be staying out of it just because it's such a low point, struggling to break below. I think that even if it does break, it's going to spike back up and sit around this level for a bit of an extended period of time. When we look at the Kiwi yen, you can see that the yen has actually been very weak over the trading session today. We saw it push towards the upside on the US yen hitting that 139 level. So that's why we saw that push towards upside even on the Kiwi yen. But anticipating some downside move and volatility in the Kiwi dollar, I think that we're likely to see the Kiwi yen trade back down slightly. But I think that we're going to see a lot of volatility at this point, right? So my levels here would be about 84, I would say 84.50, right? So we've seen that reaction there. If I drag it right across, you can see that reaction here, the area there, and the area here on the 11th of July. If I'm looking for downside, and I like how that pinned at this point, I'll be looking for price to come down below 84.50 before looking at further downside towards 83.30, towards the 83.30 level. So I would say stay a little bit flexible on the Kiwi yen because we have both that upside and downside potential. I'll walk you through that. At this point, if price does break below 84.50, then we could be looking at a selling opportunity, say about 84.30. At about 84.30 there, stop loss just about higher above that resistance at 84.80, just about 84.80. And then take profit will be towards the next support level at about 83.40 there. So a very good, nice setup towards the downside. If we see a rejection at this point, if we see that break of the 84.50 support level. However, if we see that push towards the downside, great. However, if we see it hit that support level and bounce back up, then your next resistance level could be at 86.55, or at a near term one will be 85.50 there, right? So in this case, I would say entry could be a rejection of this support, bounce back up at 84.80. You could be looking to buy with a take profit at 85.55 there, or 86.55 with a stop loss at 84.30. So have a little bit of flexibility on the Kiwi yen here. If we see significant weakness in the yen, we could see this push towards the upside, or if we see the Kiwi dollar break down from that 0.61 level, that we're going to see that big downside move, both upwards and downwards potential here on the Kiwi yen. So you can be looking at either that, or if it breaks down towards that point there. So far so good. Answering your questions, receiving everything Understanding everything so far? And then following on from that, let's look at Kiwi CAD. Right. So as we were thinking about it, or we were looking at it before, fantastic. Thanks. You're most welcome. Right. So we're looking and expecting that CAD strength, but also right now seeing the US CAD push towards the upside because of that dollar strength, pulling it above 1.30 right now. Put in, you always have your support levels here. So Kiwi CAD at 0.7942 or 0.7950 at about that point. And then your resistance level is about 0.8050 at that level. In this case, I think that we are likely to see, I want to say that we're likely to see it push towards that 0.8050 level, but I can't see that much. I don't anticipate that much of a upside move on the, or that much weakness on the CAD, or that much strength to the Kiwi dollar. All right, so that's why I'm struggling to really say that it's likely to push towards the upside. Let's say that, you know, this could move, right? So I'll put another level there at 0.8. We could move towards the upside like that if, right, if we see the Kiwi dollar bounce from this point pushing up, or if we see the US CAD break strongly above this 1.3070 level and rise up to test higher, right? And you can see that as I zoom out, even onto the daily time frame, the last high point was, as it broke above this level, will be back in 2020 again at that 1.34 level. I don't think you'll get to 1.34 or even 1.32. Seems a bit unlikely with the way the Bank of Canada had just increased rates, and with, you know, the way the dollar is moving, seems a bit toppish. I would say just it could push towards upside, but it could be a very quick move up and then back down again. So just, I would say, be very careful on the New Zealand Canadian dollar there. Looks like it could push, based on the way it's set up, looks like it could push up towards 8050, but it could be a very brief move up before turning back down again. And also, if you zoomed out and saw the trend, right, it's been on that big downward move so far, just that it's found a long-term support at this point. We might see a big retrace, similar to what we saw on the euro dollar. Hit parity, broke below, big retrace back up before turning back down again. So could move higher, but it could also be a very brief move higher. Enjoying the questions so far, so please keep them coming. If you have any other questions or any other pairs that you want me to look at, while waiting for your questions there, I'll look into other pairs. We spoke about the euro dollar already. Looking at the pound dollar, this was an analysis I did earlier. I was anticipating it to come down to test that 1.18 level. If I take that away, makes it a bit clearer. It came down, came very close to 1.1823 before rebounding. I think we're likely to see the pound dollar sit right across at this point. Right, you see it sit right across at this point with no clear directions. The way the pound dollar has been moving, it's really driven by the euro dollar. It's been driven by the dollar index. So no no big news to push the pound dollar up towards the upside. So I think what we're likely to see is that it's going to sit in this horizontal fashion, and also because you can see that that downward move is likely to continue. I think we're going to see it come up, test that resistance, break, and if I'm only looking for it to break below 1.18 before looking at further downside on the pound dollar. Right, so I got another question here. Swiss franc against the yen. Good stuff. So let's look at that. I don't have it. I don't have it. So okay, let me get that up. Let me just double check. All right. Nope. So let's look at this here. Swiss franc against the yen. Okay, before we get into this, we'll look into the Swiss franc. Okay, I'll look into this first, and I'll reinforce that with analysis on the Swiss franc. Is first off, support level at 139. The immediate resistance level is at about 141 or one. Actually, I would say 142 there, just hitting that points. And then the ultimate high point so far is at about that 143, almost 143.50 level. So with the way the yen has been climbing, we saw that push towards the upside. And then if I look back into the US Swiss franc, you can see that that also has been climbing up, being pushed up because of the dollar strength, because of that dollar strength pushing it up. I was actually anticipating some Swiss franc strength or relative strength against the euro dollar and then against the dollar. So I'm a bit surprised, or I'm looking for it to reject this point, right? So I'm looking for it to hit and reject this 9850 level, possibly turning back down, giving some strength to the Swiss franc, especially if we see the euro dollar turn down further, right? So looking for that move, potentially a counter trend trade as it rejects this level towards the downside as a first target at about 9750 at the first target there, and then ultimately if it is a good counter trend, then below 97 at about 9680 there. So if that does play out, then coming back to the CHF JPY, then I'm looking for this to possibly push towards the upside to test that 142 level and possibly towards that 143 level. So in this case, I would be looking for price, nothing to do at this point right now. I would say I'll look for price to possibly sit there, trade a bit higher, test that 142 level. And if you can break above 142, then I'll look for a quick trade towards that 143.40 resistance level. Right, so I hope that makes sense to you there. Thanks for the question on the Swiss franc against the yen. Fantastic. So looking back at the pound dollar, we've done that already. Kiwi dollar, we looked at it and still struggling at that 0.61. You're most welcome. I'm glad it did help you. So you're most welcome there. Kiwi dollar at the 0.61 level. US CAD, all right. As we looked at it before, I was doing the analysis, this analysis prior to the Bank of Canada rate decision. I was expecting it to break below 1.3. towards the 1.2850 level, but it only went almost halfway towards that 1.2950 before reversing back up. So at this point right now, if it does break higher, like we were just talking about, you could be looking at short-term trades towards the upside. Be very careful that this is a point of reaching into a level that was not reached for a very, very long time, over the last 2 years. So we could see a lot of volatility there, but if you're looking at short-term trades, you could be looking to buy above that 130 level. So about, I'd say be very safe, make it about 131. You'll be looking at above 131 there. Oops. And then take profit could be at a 130, just below 132, and then stop loss below that 130 level at about that point there. So what you realize here is that as we head into that big unknown or relatively unknown territory for the last 2 years, risk reward is positive, but might not be the most, the biggest risk to reward trade there, and we're likely to see higher volatility. So just be a bit more careful there. I would say that, you know, if you have to force out a trade, then, you know, maybe look at something else. Or what I would actually be looking at, I would prefer to look towards, is for it to test higher and just wait for it to come back down, break below that point, and then look to sell it back down. I'll be more comfortable, for me, I'll be more comfortable looking for it to do that before selling back down towards those levels there. All right, so that was my view on the Swiss CAD, US CAD, sorry. Swiss franc, we just went through that. I like that formation right now. It also highlights the possibility of a double top at that 0.9850 level, resistance level there. So we might see if that formation of a double top, then we could see that repeat come back down. We could see that come back down and test that 0.9750 level. And if momentum carries it, we could see further downside again. Then looking at the US yen, right? So US yen, just before I got onto this call, we're sitting there watching the US yen climb right to that 139 level. And I was just thinking before I got into this call, did I want to get into a trade before the call at above 139, looking for it to push higher? Glad I didn't. Well, one point I was glad I didn't, because what actually happened right now is that it hit 139 and it's retracing. It's retracing back down. I would be looking for this retrace to complete before possibly looking at a further upside again. So in this case, where could this retrace complete at? I would say that I don't think it'll come down towards 137.60 there. I think even 138 seems a bit unlikely. Most likely scenario is that it will come back down towards that 138.50 at about that point, right? Or actually, no, it'll come down, break below that point, and then bounce back up. Then I would be looking to buy up from above 138.50. It needs to come down, break below that point, bounce back up, look for it to buy above that point towards that 139. Ultimate target right now, short to medium term target on the US yen is at 140. So I'll be looking for that move towards that 140 level. Right now seems to be a bit of a retrace, similar to what we've seen here, right? A big shoot up, a retrace before turning back up again. And we've seen it happen many times here on the dollar yen. So this could repeat again. With that, pound yen is quite similar. I think we're going to see it come up towards that 165 level based on the way the dollar yen is likely to move, not so much because of the way the pound dollar is likely to move. So we're going to see that push towards the upside, and then maybe with the way the pound dollar is behaving, we could see further weakness in the pound dollar, pushing it back down again within that channel, within the diagonal channel. And then where was the next one I want to look at? Euro yen. Right, so this was the analysis again that I did previously. I was looking for euro yen to sit across and turn down, anticipating that the euro dollar was going to break below parity and we're going to see it drop quite significantly. But what we actually saw was the euro dollar pushing higher after it broke briefly, and also with the dollar yen pushing towards upside. So in this case right now, given that the way the euro yen has moved, I would say that this 139 level seems to be forming a good base, a good support level at 139. Look at the candle, look for the candle to close positive, look for the candle to close green towards the upside. Then we could see further upside on the euro yen, possibly towards that 141, possibly towards that 141 resistance level. So if this closes positive, closes towards the upside, which it looks like it's trying to do, you could be looking at a buying opportunity about 139.50 or 139.60 there. Stop loss just below that support level, 138.70, and then take profit level just below 141 there at about 141.80 or 140.90 there. Still a positive risk toward towards the upside. This is all going to be dependent on the hang on. This is all going to be dependent on the dollar, on the yen pushing towards the upside, not so much on the euro dollar pushing or recovery in the euro dollar, because there's no real reasons why we should see the euro dollar push strongly unless we see this base form and something changes in the eurozone, like if they come out and say that they're going to increase rates by more than what the market is expecting at this point, or if we see that the Russia-Ukraine war gets resolved earlier than expected or better than we expected, or if the oil crisis, the gas crisis in Germany gets resolved, that might alleviate some of the worries and concerns in the eurozone. We might see some push towards upside, but all that seems a little bit unlikely at this point. Likely to see it sit in consolidation between those two levels before testing lower, if we do see the dollar index push up towards the 109 level again. All right, so dollar index, as it goes into that very high point, we're going to see more volatility. We're going to see a deeper retrace at times, but overall, I'm still looking for that push towards the upside as we see it get supported by those levels there, right? So I could see that come down and push back up again towards the upside there on the dollar index. Any other questions if you have? Any other pairs or charts that you'd like to get some analysis on? Happy to do that. Aussie yen, we did that. So Aussie yen, I was looking at before that we had a bit of a head and shoulder pattern there forming. I think that was on H1 time frame. So Aussie yen was a head and shoulder pattern forming there, and I was saying that I was looking, it was a bit looking for it to come down, hit that level before bouncing back up again. It did that once, it did that twice, and it's now at that 93.8 almost 93.80 level. Looking at this point as a key support level there, right? At this point here at 93.60 level as a key support level right now, could be a base for this to push higher, given that yen weakness. And also if we do see now Aussie dollar is going to sit in this range, so I think this is going to bounce back up, possibly going to bounce back up, which could bring some upside to that Aussie yen again. So I think this might be a good base level for this to push first towards that 94.20, right? 94.20, which we've seen here happen in June, a couple of times there already, and then ultimately towards that 94.50 level. So what I'll be looking for here is the Aussie yen to close positive. So it would have made a bit of a pin at this 93.50 level. We can see further upside, maybe about 93.80, stop loss at about 93.40 or 93.45, and then take profit towards the upside at 94.50 there. So a very good risk to reward trade there. What you need is for it to close towards the upside, close above 93.80 before looking for that buying opportunity towards that upside on the Aussie yen. Right, and then lucky last, let's look at gold. Right, so gold, I was again previously looking at this towards the downside, did that, right? So gold, when I was looking at it at 1727, broke down towards that 1712 level, rebounded strongly back up, now tracking back down again towards 1716. What I would say is that gold doesn't seem to like this level. You can see that it tried to break lower, but right now trying to push back up again. I would say that we're likely to see gold come back above that 1720 level, possibly trade within this area. Unlikely to test towards this resistance point again, but we're likely to see it hit up, trade around this area before tracking down again. Long-term view or medium-term view is for the gold price to hit towards the downside of 1700. So I think that that will be a more of a medium-term view, rather not a short-term view. So I think a short-term likely pounds up, trade within that 1720 level before maybe tracking lower again towards 1700. Righto. Any other questions? Did you put in the chat for me, please, if you had a good information, if you enjoyed the session today? If there is, and please remember that if you're looking to jump into any trades, do manage. Fantastic. Thanks, Zoran. All right, if you do jump into any trades, please remember to manage your risk, manage your trade sizing, right? A lot of times it's not a bad trade analysis that catches you. It's a mismanagement of risk that catches a trader. So, most of the time you get to survive a bad trade if it's properly risk managed. If you overtrade, over leverage, then that's what gets to hit your account more significantly than a bad trade. Thank you all. Great session. Fantastic. Awesome. Super. Thank you all. And I hope you enjoyed the session. I hope you gained a lot. Looking at the fundamental analysis, looking at the way that I look at my charts and I look at some trade ideas. I hope it helps with your trades. And, we hope to see you. I hope to help you through your trading journey again. With that, trade well, trade safe, and I'll see you again. Thank you all for attending. Take care now. Bye-bye.